Okay, so I thought I'd use this opportunity to talk a little bit about a lean approach to venture capital portfolio management. This is where you have a portfolio of startups that you're looking after, and a lot of the time, the way that this works is you invest your money, you do your due diligence. After a selection process, you choose which startups you want to invest in, do your due diligence, pay the money, and then see how they go with a catch up once a month, once a quarter, to look at the figures, look at the performance, and then decide what to do next. The problem often is this is too hands off, and there isn't enough intervention. The problem is in startups, many startups need an awful lot of hand holding, they need a lot of help and support to really perform at their best, but that help and support is often very, very expensive in both time and experience. So here I am, I'm going to suggest a new lean approach to venture portfolio management that draws on a lot of my experience in working with startups over the last 10 years, my experience with lean and lean startup, and playing around with the business model canvas as always. And so let's see if this works. So I've chosen this. It's a lean because runners are lean and they managed to get an awfully long way very, very fast. I think this is the Everest Marathon, which I did a few years ago. Anyway, enough about that. And oopsie, we've got previous. This went wrong quickly, didn't it? Okay, so the entrepreneurial promise. This is what they promise, where entrepreneurs are pitching to you. I've seen it from the inside. You've got something cobbled together and absolutely crazy, but somehow you practice the pitch, and this is what you sell the investor. You sell, okay, it may not be exactly this beautiful right now, but in 5 years, 10 years, 6 months, 18 months, when we get traction and scale, this is what it's going to be look like. It's going to be amazing. And investors, however hard-headed they are, they often buy into this emotional promise, this dream that entrepreneurs, whether it is the actual dream, whether it's the promise of the money, the returns in the future, or the opportunity to disrupt something, there's always something there, so they buy into it. It's never really about numbers and returns, because those are all slightly ambiguous and maybe even a little bit of wishful thinking. So what happens when the entrepreneur is going? So you've got this construction site. I've got no idea what this is. It looks like some sort of building, high density residential or commercial area, but the lighting is low, stuff's happening, you think, or at least there's lights on the cranes, but what really is happening underneath in the business, you don't know. Often the entrepreneurs don't know, because they tend to searchlight here, searchlight there, searchlight there. They're constantly focusing on little bits of it, and the big picture is difficult to understand, and certainly is very, very difficult to measure and understand what is actually happening in the business. Are the hypotheses really, really panning out? Are they measuring? Are they even measuring the right way? Are they doing the right sort of experiments? Have they got the right business model? Is traction that they're finding, is it real, or is it just another pipe dream of the founders? Yeah, what is reality? What is distortion? What is playing out myth or lying? We don't know, and this is something that it makes it very difficult to understand for a portfolio owner. Okay, so I have some resources, where do I put them? And often it's like when you have a dog or a sow and they've got a large litter of puppies. They spend the time and resources on the puppies or the piglets who are making the most noise, that are most obnoxious, and getting in there to suckle and get their milk. This is the way it often is with the startups. More charismatic, more ability to network, more ability to get the resources there. That's what they're there for. That's why you've invested in them. So this causes a problem. And I think, that's in the wrong place. Let's move that across there. So before I make my decision, I'd like to see those meaningless statistics. Again, certainly I've worked in and with startups where I've been responsible for producing the statistics, and it's been a little bit scratching. Yeah, they're not wrong as such, but and they're the best that we can do, but do they really reflect the underlying reality that we know it? And often there is a big gap. And so when startups, the founders, are reporting to the board and to investors, there's often how valuable are those statistics? Is the data, is the metrics worthwhile, good enough to be making decisions on? And often the problem is we do not know enough. We don't have enough confidence. The methodology is poor, and so on and so forth. So one of the ways that I've been working over the last few years is extending the business model canvas. So this is the business model canvas made famous by Alexander Osterwalder at businessmodelgeneration.com. Absolutely awesome tool. And in a sheet of paper, you're able to lay out very quickly how a business works. And you can broadly say that we deliver this value to these customers and they make this money. We use these marketing channels to have this relationship. And sorry, I'm on the balcony and it's a wee bit windy. And to do that, we need these key resources to deliver these key activities, and key partners help us with the activities and the resources, and this costs X. And the cost, the revenue minus cost, should be our profit or our market share or our growth, whatever. That gives a very quick oversight of the business model canvas. Now, many people, many startups go out there and they say, okay, this is our business model to start with. They map it out. Reality interjects. With one of my startups where we won we got to the finals of HSP Startup Stars. We went through something like 27 different iterations of the business model over a period of about 18 months in 2009, 2010, when the market had changed and our business model went from absolutely brilliant and making lots of money to being an absolute disaster, because none of our customers had any money and none of those customers were buying, and there was nothing that marketing or sales could do to get out of that situation. So we iterated through multiple times, and many startups don't do that. So first of all, the first thing to do is continually ask the startup, what is your business model? Report using the business model canvas. That says current measure, what do they think they're doing? And that's a great management tool because it makes sure they've got their entire team on the plate, same boardwalk, and it means that it's very easy for them to explain to the investors, to board members, this is where we are, this is why we've changed the business model. It helps to hold them accountable. So that's one very simple, very easy way of making the reporting. Why I've taken it and extended it is through putting all these pretty colors in. So there's text there, but I've just taken the text out because it's not relevant here. So what we're seeing here is a business model where there's a lot of green out there, and that means that certain parts of the business model seem to be working really, really well. Their activities are performing, they've got the key resources in place, their partners, they've got the costs under control, and everything looks very, very good on an infrastructure basis. But on the other hand, it says, oh, okay, they're not selling to the right customers. They might have the right value proposition, but they're selling to the wrong customers, and they're not making any money out of it, and using the wrong channels, and their customer service sucks. So is this going in the right direction? Almost certainly not. So we then need to say, okay, so as a startup, what do you need to do? Where do you need to go here? Do we say focus, okay, we've got this value proposition, do we go out and do we start doing a search for new segments where the value proposition is going to be a much better fit? Or do we say, okay, these are the segments that we really want to focus on? Our market opportunity survey has said these are the customers that we want to focus on, and has then we then need to change what the value proposition is, which then possibly means lots of changes to the infrastructure at the back end of the business model, at the back end of the startup. So immediately you're able to start homing in and you're asking the big picture questions. What do they need to do next? You're not actually bothered by, okay, so sales went up 3.2% this month. What does that mean in this context? You don't know. We don't really have enough of the content, because at this stage, almost certainly, we haven't got a real product market or product channel fit. So those data don't have enough context to have enough meaning. And so when you take this approach across a whole portfolio. The monthly reporting from the portfolio is say, okay, what is your business model canvas this month? And if for most startups, the business model canvas should be changing month on month, because otherwise they should either be seeing skyrocketing sales, or if they're not, they're going bang, 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 hitting their head over and over again on the same problem and not making progress. So immediately you've got a very clear go, no go on it. And if it's changing, then you're able to delve down. Okay, so you're reporting that these areas are bad, but you're spending lots of time and effort changing that. Is your focus in the right place? And you see, you can then take this through. So very much when you look at it from a portfolio management basis, getting the startups to report, okay, what are the values of each component of the business model? To start with startups, generally I say, okay, give it a score of 1 out of 10, where 1 is it's a disaster, I've got no team, I'm not doing anything, to 10, honestly, we can't see any way of improving it, and it would be a waste of time and money to improve it. And then once you've got that bedded in for 2 or 3 or 4 reporting cycles and they're confident, it's then starting to say, okay, how do we put numbers to it? And there are a lot of metrics that you can say, but what you're reporting is you're not interested in reporting on company performance. You have to report on company performance for lots of financial reasons, but here what we're interested in reporting on is the performance of the business model. So here you're choosing a set of KPIs or metrics that enable you to understand a lot better about how the business model is performing. So when we're doing this, the channel, instead of looking at, say, a vanity metrics, we got more views, more users each month, here it's going to be, well, what is the conversion rate on the web channel? What percentage of people are onboarded successfully and then go on to spend X? And you can very easily then link this back to a lean startup hypothesis driven approach, and then say, okay, for the next month, Mr. Startup, okay, what are your hypotheses? What are you, whoopsie, bear with me again, what are you going to do to turn this to red? Give me your 3 actionable hypotheses and the experiments that you're going to undertake to shift that from red to yellow and then from yellow to green. And suddenly you have got a very visual, very clear, very intuitive way of getting a lot of control. That then lets you spend far more time on the areas where you have got resources. You can apply the resources to those areas to have a much bigger impact and deliver a much greater rate of ROI. That then leads to significantly improved portfolio health. So this is my approach to lean startup as applied to portfolio management, and it's a very quick and easy way. You should be able to have watched this video, and probably even half of it, to be honest, and take it away and apply it to your own portfolio. And this is one of the many innovative tools that I use to help startups grow, taking business models, understanding them, expanding them, using them to solve practical problems in the life and growth of startups and new ventures. Thank you very much for listening. My name's Denis Oakley. You can find me on LinkedIn, YouTube, Quora, and denis-oakley.com.